Welcome, traders. Happy New Year. This is Impact Trading Services with another video on how to use the gold hourly volatility data service that we are providing to traders in 2023. All right, what we want you to do is go to the YouTube channel, Impact Trading Services. Where is the channel? View channel on YouTube. And then click on the playlist. You will see a guide. Where are the playlists? So click on hourly volatility data guide at the YouTube channel. Click on the guide, scroll down. What you'll do is you will copy and paste these links into your browser or hover over them and press go to. Right click, right click, and then go to the spreadsheet. This will open up the spreadsheet. That'll be for December so you can practice. Gold hourly volatility data for December 2022. And if you scroll over this one, you can have access to the, oh, sorry about that, to the guide, which we're going to review today. And then what we're going to review today is that's the guide. So right click, put it into your browser, and then you'll access the guide. This guide we're going to review today, and then you'll access the spreadsheet. Now we're actually going to use the live spreadsheet for January to review the first days in January. Right now we're going to do January 4th. So review the guide, and we're going to jump into our training for today on January 4th. Alrighty. So what we want to do is we want to pull up the spreadsheet for December. We're using the 4th, and we're starting the New York session right here. So the 4th, 1300. So this data would not be there for the 4th. So what we would actually be looking at is the 3rd. So right now we're actually training for the 4th. The 4th 1300 training day. 1300 is starting here. $1,300. So this is when we would start our New York session trading day at the 1300 hour, right here, this hour right here. And then we would pull up our spreadsheet. We would have the 3rd, 1300, that's 600. Then we would pull up all of December to see what the hours are doing for 1300. 500, 500, 400, 300. We've got 700, 1000, 400, 700, 300. We've got 2700, 700, 300, 300. So the low end, it looks as the low end is 300, high end 2200, 2500, and then we have some 1000s in between. And last week we averaged roughly 500. The week before that, the average looks to be roughly 800 to 1000. So as we start our trading day, what we want to do is look at the supply and demand support resistance areas for the start. So we know we actually have a monthly supply and demand support resistance area on the 4th today. How do we know that? We will go to the monthly chart, and then we can see that, remove drawings. We can see on the month that this area right here, this point right here, and this point right there. Let's see if we are. Scale brush. This point right here, this point right here, this point right here, those are supply and demand areas and support and resistance areas. for the month. So we can put that on the chart before price gets there, and we would expect to see a reversal in these areas. We color code this color for month. Now you can also draw the supply and demand support resistance areas using weekly and daily. So if we look at the weekly, you can see that this is a weekly supply and demand support and resistance area. And then we'll quote the week here. And this is another one for the week. So what we would expect anywhere, if price comes up in this area, we would expect price to reverse. So now we know we're entering into a supply demand support resistance area. So should price come up past this area, we would expect price to reverse here. And then what did price do once price came down? Price pushed up at the 1300 hour, pushed up on the 1300 hour into a supply and demand and support resistance area. Then price pushed down into a supply and demand support and resistance area. And then for the New York session, we actually had a range, a session range of 1,300. All right, now let's go to the hourly data to see how we're going to use the hourly data and our supply and demand support resistance areas for the New York session for today. We see the market is moving sideways. It's not trending. The market is going up and going down, so it's moving sideways. That's a consolidation after this move right here. We want to see what the daily move was before. So we see we're doing January 4th. The daily trend is up. How far has the day moved? The day moved already almost 3,000 pips. Now what we want to do is we want to say, is 3,000 pips a large daily range? Well, the previous day was 2,600. The previous day before that was 1,200. That's 1,200, 1,200, 1,500. And you can round up, round down. That's 1,700. That's 3,500. The larger days were 35, 35. This is a consolidation day. Consolidation day was 1,200. But the larger days were 3,600. And that's 2,000 there. That's 3,400. And we're going to provide daily range data for you so you can see the whole picture of the market. And you will become a consistently profitable trader. So on the 4th, the market had already moved up almost 3,000 pips coming into the New York session. What do we know is in this area? We know already that there are supply and demand orders in these areas. So the institutions have already placed orders in these areas that have to be filled. They're orders from weeks gone by, possibly last year, that are still waiting there to be filled. So what we have to do is we will mark this on the chart using technical analysis. We know that the institutions already have orders placed here. So once price enters into this area, we can expect price to reverse. So what we need to do is we need to go to our hourly data during the New York session and then start planning our trades. So we know 1,300 has moved. This 1,300 moved. $1,000 pips up from this supply and demand area. Alrighty, so we'll go to our chart. We'll go to the hourly volatility, and we see 600, 500, 500, 600, 500, 1,000. So we have some 1,000s in there, and then we would make a trading decision on 1,300. Once the 1,300 moves into this area, we have a double top right here, and then we would expect a reversal. Now we enter on the 5-3-15 minute for inter-session intraday trading. (2022) January 4th. We're practicing January 4th. And then we want to go to the 1300 hour. 1300, start of the New York session. All right, so our trade entry here for the 1300 hour would be on this trade signal on the 3. This trade signal right here on the 3. And this would be an hourly supply and demand that we would draw with the blue line. And you can line that up with the daily. So if you place this hourly supply and demand and you look on the day or the hour that's near, then you would see that this lines up with previous day support and resistance. The blue line here, this blue line here lines up with this daily close. It lines up here, this blue line here lines up with this daily open, daily close. So that's the supply and demand and support resistance area that we know price will reverse on. So we entered here. You could place a trade at this blue line. You could also use hourly. You can use 4 hourly. Let's see how the 4 hour looks. There you go. You have a 4 hour supply and demand support resistance area there. So what we'll do is we will place a trade here once we have a trade signal here. So on the 1300 hour, we would place a trade here with this trade signal. This trade signal right here says to go long. We would place a long trade here, and then our stop loss would be roughly 15 pips for this trade. The red line would be our stop loss. We would go long here, and then our stop loss would be right below the roughly 15 pips, right below the supply and demand area. And then you can have your own risk management. If 15 pips is a small stop loss for you, then you'll need to know what your risk management would be per trade. But that's the trade entry. And then we would expect this trade to move, will go no less than, on the day before, 1300 did 700. On the day before, 1300 did 700. On the weeks before, 1300 did 500, 500, 400, 400, 700, 1000, 400, 700, 350. So when we enter this trade, based on our historical data for the hour of 1300, 1300 in the last month has averaged around 600 pips. Average. If you average 700, 2000, 700, 450, 550, 650, 1500, 350, 2500. If you average that out, we would expect this 1300 hour to move once we get into this trade at least 350. But what did it do? So you can set a stop loss of an intraday stop loss of 15 pips, and your first profit target can be at this supply and demand support resistance area right here. And it just so happens to be at the 0 zeros. 5000 zeros. And that's a 40 50 400 pip trade, 350 trade. And then you have to decide what's your risk management, how many pips do you need to make per month to earn a living, and then you can trade right there. So now let's look at the next hour, and then we're going to teach you how to do the session swings for the New York session. This would be swing 1, this would be swing 2, this would be swing 3, and this will be swing 4. And then when you combine the swing data with your hourly volatility data, then you will become a highly consistent, highly profitable trader, knowing that the New York session usually has 3 to 5 swings, 3 to 5 price moves, up, down, up, down, up, because that's how price moves. Up, down, up, down, up, down, because that's how price moves. That's historically proven in technical analysis data, because there are orders at these points, institutional orders during every day. Every single day, price moves up, down, up, down. So for the New York session, that would be called a session swing. And then you have a session range. The New York session range, for this range, went 1,500 from the top of the range to the bottom of the range. All right, so we will continue to train on this. What should we expect for the 1,300? The 1,300, we set a profit target of 300 to 500. So that's 400 here. Okay, that's one trade. That's one profitable trade. Now we know we're entering a double top. This is a monthly supply and demand area. We can scroll out on the chart, go to the daily chart. We are training on the 4th, and we had already marked off this monthly supply and demand area, and that's the first time back in the month. So we will do first time back studies for you that say when price moves up or moves down into an area for the first time, price usually moves in the opposite direction of the order, the supply and demand order blocks, roughly 2,500 pips. So whatever the data says, there's a first time back. So this is the first time in the month where price has entered into a monthly supply and demand area. And then the New York session brings the volume. Alrighty, so for the 1,500 hour, what should we expect? And we should expect price to move down. So for this next trade, you could trade short for the 1,500 hour in our data. Let's see what the 1,500 and 1,600 hour has done. So remember, we're actually working this day here. So this data would not be here. So we would use the previous day's data and the previous day's trends in order for us to, we'll go back to the guide. What are we looking for? Every day, what are we looking for? We need to plan our entries. We need to plan our stop loss. We need to plan our trade per pip value. We need to plan our profit targets. All right, so we'll go to the spreadsheet and we'll say the previous day's data tells us the 1,400 hour, 1,500 hour, 1,600 hour has moved. This moved, the day before moved 1,000 pips. That's 1,500, that's 1,600. So we're looking at 14, 15, 16 now, and we want to make trading decisions and expectations for our 1,400, 1,500, 1,600 on the trading day of the 4th. So 1,300 is passed. 1,300 has entered into a supply-demand area. Now price is reversing. Now the 1,500 hour, what should I expect this price to move? We know the price is reversing. How much should the price move down? The price continued to move down, 1,500, 1,600. Price moved down 1,000 pips. So 1,500 hour, if you wanted to set a goal, let's look at the 1,500 hour so we can set a profit target. We entered on a 3-5-15 for our trade. 3-5-15, that's a three-minute signal. And we're going to have a 3-5-15 minute practice for you. That's a 3-minute signal right here to go long. This is a 3-minute signal to go short. This is a 3-minute signal to go short. And these two are 3-minute signals to go short because we have actually entered into a supply demand area, a support resistance, that's a resistance area, price cannot move past. And then we have a candle pattern up here, 1, 2, 3, 4, a 5 pip reversal candle pattern that tells us we can enter this trade here and put a stop loss here. So our next trade, our next viable trade during this trade session would be entered, we would enter here, the way that we mark trade entries, we would do that, and then we would place a green for, that would be a trade entry for us. And then we would expect, we would place a stop loss right here. So our trade entry would be here for the next trade, and our stop loss would be here. And then let's see how that would look in real time. All right, this is on a 3-minute chart. This line is already drawn. We have a double top here. This line is already drawn before the session. This is a monthly supply-demand support resistance level. This is a daily high. And you can mark daily with blue. I believe we use blue for marking daily highs. And then there's also weekly supply and demand right above us. So if price does go above this, we have a stop loss, a tight stop loss, but we can also look to enter into a trade in these areas, but we would want to wait till price got there. So if we got stopped out here, then we would want to wait to see when price would reverse. All right, we're in the New York session. We just entered into this trade, and then we set our profit targets based on the data. Based on the data for the 1300 hour. We went to 1300 hour. We said 1300 has moved 500. We did our 1300 average from December. We looked at 1300 all through December. And we've decided that we want to have a comfortable trade profit target of 400 pips based on the data. So the data does not lie. That's what price moved at 1300. So you have concrete historical data. Does not lie. So now we can say we can comfortably place a profit target of 100, 200, 400. Now price did move 1,000, 500. So you have to decide how you want to manage your trade, money management during your trade. Now we're coming up into the next hours in the New York session. And then the New York session usually has 3 to 5 swings of roughly 1,500 up, 1,500 down, and then you have 500, 300, 500. And then sometimes late in the New York session, up the hours of between 17 and 19, you may get another 1,000 pip swing. So we know this is swing 1 for the New York session. Swing 1 has moved. Swing 1 has moved 1,000 pips. But what do we see here? Price is getting ready to enter into a support resistance supply demand area. This is a resistance area with orders. You have institutional orders all in this range. Now if we get a trade signal, now that's a trade signal. We'll wait. Be patient. This is a trade signal that we could place a trade here. Now, if we want more confirmation, then we would wait. And then if you're more comfortable, then you can go to the 5-minute chart. That's a 5-minute trade signal. This is a 5-minute trade signal right here. Once you get these two candles from this candle, this inside bar, and this will be the candle reversal practice. We'll practice trading on a 3. This is another 2-bar reversal. You have a pin bar and a declining bar. Once we practice these reversals at this area, then you can safely say this is going to be a positive trade. And then you place your stop loss here, and then you let the trade play out. So we know that's the 5. That's a 3-minute. That's a 3-minute. We would have placed this on a 3. 5, 3. Let's look at the 15-minute. All right, so that's your 15-minute reversal candle right there. Why? Because price came up into the supply and demand support and resistance area of the hour of the day. The daily swing moved 1,000, and now we have to plan our trade. Now again, once we go back to the day. What do we know about this day? The previous day moves. This day has moved almost 3,000 pips. The daily trends 3,000 pips is a very high end. That's high end. So we would expect a reversal during the New York session. So when all of this lines up during the New York session, then you can safely place a good trade with a tight stop loss and then allow the trade to play out. So we would have entered this trade here, and then we would want to go to the hourly data for the 1500 and 1600 hour and look at the historical data. So 1500, 1600 has moved 1700 pips, 600, 500. Let's see what it did in December. 1500, the last week in December, 1500 moved 500, 450, 700. 1500 to 700 is our next swing for this session. 1500 hour moved 500 to 400, 500, 500, 450, 700, 500, 450, 1000, 750, 2500. So we would expect this move here to be no less than 500. So we would place a trade here, and then we would want to measure 500, roughly 500 here, and expect price to move down into another support resistance area. So that's roughly 500 pips. We can find a 0-0, and then we can watch how the trade plays out. All right, it met our profit target here. Now remember, price moves up, price moves down, so you have to be patient. Now we would believe that this is a daily high, a daily high, which means we would probably hold this trading level for the rest of the day. So once we've met our profit targets during the day, you could comfortably place this may be your last trade of the day if you have already met your trading numbers for the day. That's a daily high. We've planned that out, and we will probably hold this for the rest of the day because this is the first time this month that price has went into a monthly supply and demand support and resistance area. First time this month. So we can remove these drawings, and then we can look that this right here, this area right here, is a monthly supply and demand support and resistance area. And this is the first time in the month that the price has moved into the area. So we could probably comfortably hold this trade during the day because, again, the daily trading data tells us this is a high end on the day. So 1500 to 1600, let's see how price moves. Alrighty, 1600 moved 800 pips. 1600, 1700 moved 800 pips. And then during the trading day, if you wanted to trade this long, that would not be a bad trade either because you have a monthly and weekly supply and demand support resistance area right here during the trading session. Now, when you combine this data with the New York session swings, which will provide that data for you too, then you know this area right here is most likely a good place to go long. So you have a lot of opportunities to place trades with great risk management, and stop loss management in order to be highly profitable during the New York trading session. And then we stopped trading roughly, if you want to trade at 1900, you still have trading opportunities here because this is a supply and demand and support resistance area. But again, you want to go to your hourly volatility to see the 1600, 1700 hours. That's 1500, 1500 moved. 940. So 14, 15, 16. That's 1,000 pips. 1,000 down, 1,000 up, and 1,000 down. And that's how you plan your profitable trades based on areas and based on your trending data. So the 1500 hour in this trade moved 1,000 pips. We know 1500, 1600, 1700 on our data for the previous weeks did move 1,000 pips. 1500 moved 2,500, 700, 1700 moved 1,000. So we know between these hours, between the hours 14, 15, 16, 17, we're going to have some larger pip moves. Now you can plan your trades based on the supply and demand, the support resistance areas, and then based on your entries. So 3 to 5 minute entries. That's a trade signal. This is a trade signal. Let's see our 5 to 15 minute trade signal. This 5 minute trade signal, you would not have been able to enter this trade on a 5 minute. You would have to enter here, but that trade's gone. This 5 minute trade signal, you could enter here on this 5 minute trade signal. You could enter into this trade right here based on this bar and based on this area. And then you could enter this trade on the 5 minute trade signal. Let's look at our 15 minute trade signals. That's a good trade signal. This is a good trade signal. These two bars right here, these two inside bars, that's a good trade signal. And then you would actually have to trade, you would have to be a great trader if you're using the 15 minute chart to believe that this supply and demand area would hold. And then you would place your stop loss once price starts moving up. You would place your stop loss somewhere in this area, a 10 to 15 pip stop loss. And that's why on the intraday trading, we like to use the 5, 10, 15 minute chart for trade entries. And then we will do trade entries practice. But again, once you go to use the data, you know this data does not lie. So between these hours, what are we looking for? We're looking for, you go back to the guide, we're looking for trends in the data during the trading section, during the day, the week, the month. Now again, we're going to practice how to do intraday trading using the same methodology, the same technical methodology, daily trading, weekly trading, position trading, monthly trading. All the same methodology, just on different time frames. Same session, same swings, daily swings, weekly swings, monthly swings. But for this intraday, what are we looking for? We want to be hour specific. We want to look for trends, and then we can plan our entries, plan our stop losses, plan our our pip trade per value, and plan our profit targets. How to use. Alrighty, that would be the trade analysis for the New York session for the 4th. Go to the 1 hour. New York session for the 4th. Alright, continue to practice. We'll practice drawing supply and demand and support resistance areas, and then pull up your hour volatility data. Go to the charts. Look at the charts for the previous days, previous data. You've got all of December for you, and January is coming up. December we're giving to you for free. Use the data, and then come join our community as we continue to grow. We want 2023 to build great, the most successful, consistently profitable traders using gold in the Forex market. Gold hourly volatility data. Go to the YouTube channel, subscribe, be sure to subscribe. Go to the links, right click, put them in your browser, pull up the data, go to your charts. We highly recommend whatever chart service you're using. TradingView is a great resource. You can backtest, and then the market does not lie. The data does not lie. As you can see, there's no fancy charts. There's just supply and demand, orders being filled, support and resistance, supply and demand, support and resistance. And then we'll also get into some chart patterns. So once all these line up, then you'll see the patterns every day, and then you can become a successful trader and earn a living, and then go bless somebody, and then teach somebody else how to earn a living trading successfully with proven techniques. All right. See you guys in the next video. We will do January 3rd for you coming up, and then start practicing. See you in a bit. Happy trading.